The Fibonacci is simply a tool that helps us to understand where price is going to retrace back to before price continues a movement. That means if price is an uptrend, there's a point where price will start retracing. The Fibonacci helps us to seal that point where price is going to stop retracing and then continue to the upside. Now, for you to understand how Fibonacci works, you need to understand that there are three key levels or three important zones on the Fibonacci. Now, the first one is at the 0.5 level or the 0.5 zone. Now, this zone is referred to as the equilibrium level, the point where the amount of buyers in the market is equal to the amount of sellers in the market. Now, the second one, which is referred to as 0.618 level, is referred to as the golden zone. Now, this is referred to as the golden zone because it's a dynamic support and resistance where price is going to actually react from if price eventually gets to that zone. Now, the third one is referred to as the 0.786, which is referred to as the discount zone or the premium zone. Now, if price is in an uptrend, it is referred to as the discount zone. And if price is in a downtrend, it is referred to as the premium zone. And now there's a way to plot the Fibonacci. If price is in an uptrend, you want to plot from 1 up to 0. And if price is in downtrend, you want to plot from 1 down to 0. I'm going to show you a sketch of how to use Fibonacci. And as well, I'm going to show you on the chart how you can apply Fibonacci into your strategy to make good trading decisions. But before we go into that, if you're seeing for the first time, my name is Divine, and what I basically do on this channel is document how I trade, and as well show you my strategy. If you want to see content like this, I want you to like, subscribe, and as well drop a comment. I'll be right back.
I'm going to give you a sketch of how to use the Fibonacci tool. Before that, let me show you what Fibonacci tool look like and how you can set it to have my own settings, because different traders have the way they set their Fibonacci. Now, what you're going to bring for here is the Fibonacci retracement tool. This is called the Fibonacci retracement tool. And now, how this tool works is that first, let me show you my settings here, because different persons have different settings and how they use it. Now, if you look at my settings here, you can see that I already turned on key ones, the 0.618, which is the golden level here. And we'll have the 0.786, which is the black line here. And we'll have 0.5, which is the blue line here. Now you can pause and actually set your Fibonacci to be like mine, so you can be using it the way I'm using my own here. Now, if you look at this Fibonacci tool now, you can clearly see the 0.786, which is the black line, 0.618, which is the golden line, and 0.5, which is the blue line. Now, for you to understand how to use this Fibonacci tool, you first need to pay attention to this one, which here is just 1 and is 0. But now remember what I said last to you, that if price is in an uptrend, you want to plot from 1 up to 0. And if price is in a downtrend, you want to plot the Fibonacci from 1 down to 0. That means currently now I put it up from 1 to 0. But if it's a downtrend, I'm pulling it up from 1 down to 0. Did you see it? This is for an uptrend and this is for a downtrend. And for the downtrend, I put it from 1 to 0, and on the uptrend, I put it from 1 up to 0. So you have to bear that in the back of your mind. Having said that, let me give you a sketch of how to draw the Fibonacci tool before we go to the chart. Now, let's for instance say price is in an uptrend, and an uptrend look like this basically. Now this is an uptrend. If you want to draw the Fibonacci tool right now, what you want to do is to draw from one swing to the next swing, just like this. Because it's an uptrend, we want to plot it from the up to 1. Now if you look at this closely here, this retracement level that happened here now align perfectly to our 0.618, which is the golden zone. Do you understand? So that's how it works. For you to be able to plot your Fibonacci, it has to be from one swing up to the next swing, or from one swing down to the next swing. Now for a downtrend, let's assume a downtrend is moving like this. Now if you want to plot your Fibonacci on this downtrend now, remember you also have to do this too. From one up to down. And if you look close again, it aligns perfectly on the 0.618 level. Now, depending on the level you want to pay attention to, if you want to pay attention to the golden level or the premium or discount level, this Fibonacci is going to tell you exactly where you should focus on. Remember the first one I drew from 1 up to the next swing, which is 0. Now this one too, from 1 down to the next swing. Now this is the first swing. Let me remove this one. Now this is the first swing. This is the first swing. Sorry. This is the first swing that you pull down to this swing here. Now if you want to draw it again too, you can actually draw it from this level down to this level. As you can see, this one aligned at the 50%, the 0.5 retracement level before it proceeds to downside. Now let's assume you want to buy from this zone now, and this place is considered to be, let me say, a swing high. Now you've drawn from this swing to this swing. Now what you want to basically do is that you want to wait for price to sell back into any of these zones here. That means you want to wait for price to come back to this golden zone or come back to discount zone here before you continue to buy. Now for the uptrend is called a discount zone, and for the downtrend it's called a premium zone. I'm going to explain this on the chart.
Before we go into the chart, I want you to understand that there's a way you can use the Fibonacci to confirm that you're doing the wrong thing or you're doing the right thing. I'm going to show you how to use this Fibonacci while I'm using my strategy as well too. Let's go to the chart so I'll show you this.
Now I'm going to analyze this thing from the higher time frame down to lower time frame, where I can be able to apply the Fibonacci. Now what I want to do first is to go to the higher time frame, which is for me daily time frame, and understand the overall direction of the market. Now if you look at this chart very well, you see that price is in the downtrend, but the trend should tell us what price is saying. Now look closely here, we're in the downtrend. And if you look closely to this side too, you will see that we are zoning in a downtrend. So this is the support level for this trend, and this is the resistance level for this trend. And you can see price is currently at the resistance level. So our key level here is simply this level here. This level is the key level. This level as well is a key level. This level is a key level, and this resistance here is acting as a key level as well too. So what you want to do now is to pay attention to what price is doing at this key level by simply going to the 4 hours time frame to understand the market structure. Now on the 4 hours time frame, we can clearly see that price. Let me move this one so we won't get confused. Now on the 4 hours time frame, we can clearly see that price is in an uptrend. Price is printing a series of higher highs and higher low. This is the high, this is the low, this is the high, and this is the low. Now, since the daily time frame is telling us that we're in a downtrend and it's that level, we're going to be paying attention to what price is doing on the daily time frame, which is saying downtrend. So wherever you're looking for down below this place is a sell opportunity. Now, if you study this trend very well, we'll see that what price is doing at this level is that price is simply giving us a rally, a base, and a rally. Now, if you look at this recent one, now you see that this place is a rally, a base, and a rally, and price have retraced back into this demand zone. and price have retraced into this zone that was referred to as the base here. So what I'm simply looking at for now is that since price have retraced to this zone here, we're expecting price to buy. So we're going to go to the 1 hour time frame and understand what and refine this point of interest, and as well understand what price is doing at this level here. If this zone is likely going to continue to buy or continue to sell. Now on the 1 hour time on the 1 hour time frame, we want to refine this zone now to become a point of interest. And what you can clearly see is that this place that price gave us a dodgy candle is our point of interest. We are only interested in what price is doing at this area here. And as you can clearly see, when price came to this area here, price engineered liquidity. So this place right now is a place where price engineered liquidity, giving us this double bottom here, showing us that price have engineered liquidity. So chances are that this place, this zone is likely not having enough energy to continue to the upside. And you can clearly see price gave us liquidity at this zone here, double top at this zone here. So we can clearly see here is price reacted from this demand zone or this amount of interest, but price give us or engineer liquidity at this zone here. So if price is going to continue to the buy to the upside, what you want to see price do is price come back to this place, take out this liquidity, and then continue to the upside. Or what you want to see price do is take out this liquidity first and then continue to the downside. Now, because this time frame is telling me that the price is in downtrend, I'm expecting price to take out this buy side liquidity first and then proceed to take down even to this sell side liquidity. Now, you might be asking where does Fibonacci level comes in now? Now, you cannot just use Fibonacci level just like that. You have to be able to apply it with your strategy for it to work. Now, how I apply Fibonacci level on my strategy is this. Now, because I'm seeing that price in a downtrend, and this is the swing high that price gave us, and this is the swing low that price gave us. Now, for me to sell or for me to buy at a discount or at a premium level, for me to sell from a premium level, I'll simply use my Fibonacci 2. And remember how I said we want to use this Fibonacci 2. If it's downtrend, you simply plot from the swing high to the swing low. Now, let me put this very well. Remember how I did it? I plotted from 1 to 0, which here is the swing high, and this is the swing low. So what I want to basically do, see price now. I want price to come back to this level here, at my premium level here, which is around this area here. So I want price to come back to this premium level here for me to take a sell entry from. Now I'm using this Fibonacci 2 now to get my entry to buy from a premium level. Sorry, to sell from a premium level, and it simply is aligned perfectly with my strategy. Oh, don't remove that stuff. It aligned perfectly with my strategy because this level now is valid now because there's liquidity around this area. There's liquidity here. So I want price to simply buy back to this zone and then sell. Now remember this. I'm shorting from this zone. I'm putting my stop loss above this swing high here and targeting this area. Now let me use Fibonacci to show you where I'm going to target for a sell position in this area now, in this setup. Now if you look closely here, this is a swing low and this is a swing high. If I'm to pull my Fibonacci and put in this swing high, because the price is going to the upside, and I'm possibly looking at where price is going to retrace back into. Now if you look at this swing high, if you look at this swing low up to this swing high, you see that price is meant to retrace back into this golden zone here, or this premium, this discount level here for price to continue to buy. So I'm expecting price to align perfectly with Fibonacci and come back to this zone here. And this zone actually meets my strategy. There's liquidity around this area. There's strong liquidity around this area. So I'm expecting price to come back to this Fibonacci level zone or this Fibonacci discount zone, taking out this liquidity that is here, taking out this liquidity, and as well taking out this double bottom that are this zone here. So you see how it aligns perfectly with my strategy for a sell. Remember, first I had to use the Fibonacci to get this my 0.786 level here, which is a premium place to buy from, and as well my exit point, which is this zone here, which is a discount zone to buy from if buyers were in the market. So every buyer that's on this trend now is trying to wait for price to come back to that discount zone, which we saw on the Fibonacci. And remember how I got the discount zone? I simply use my Fibonacci and plot from this swing low to this swing high, and the Fibonacci 2 is telling me that the discount zone is at this level here, and that is exactly where I put my take profit. And this aligns with my strategy because there's liquidity here for price to take out. There's double top liquidity here. There's double bottom liquidity here for price to take out. So price is likely going to take out this liquidity and as well take out this liquidity right here. I think that will be all for this video. If you have any question you want to ask me, you could drop a comment down in the comment section. I will see you in the next video. Peace.